Afternoon, everybody. How are we doing? Afternoon, Mark, Steve, McKenna, Alistair, Crom, Fletch, Danny, Church, Rico, Dylan, Mumo, Virginia, Pot DJ, XUpdate.news. How you doing? All good. Happy Thursday. Happy Euro rate announcement day, as usual. No change. Usual stuff. Afternoon, Ross Wheeler. So today we've had quite a lot of news. Not a massive amount of movement, I have to say, but fair bit of news. So we'll kick off with the news and have a look at the overnight stuff to start with. This is kind of midnight, so Japanese sort of talking here, but nothing much overnight from Japan regarding the intervention. So yesterday we had a suspected, excuse me, my voice has gone really, can't speak. We had another second intervention, which was suspected, but not 100% sure. So it's a 250 pip move on a 150 ADR. So it's about 175-ish. So 250, 150, 300, yeah. About 175 ADR yesterday. Excuse me, just had a drink. My voice is dying. So yeah, nothing much out of the Bank of Japan regarding that yesterday. Obviously, all the traders are speculating that that was another intervention move. We are pulling back a little bit on it this morning. So I was watching that area there for a pullback, which we didn't get. So we actually just moved down and had a second intervention go in. So it does look like at the moment this one might hold, but we thought that last time. Yeah. So we'll see where we go from here. All the trend line junkies are dead. But we'll see what happens with the yen. So nothing overnight from the Bank of Japan of any interest, really. We had the Australian unemployment rate come out at 4.1. That was the forecast, so it's gone up. So if you look at the Aussie pairs, basically today we've had a little bit of a spike on the Australian dollar, but not an awful lot. Unemployment going up typically would be indicative of wanting to drop interest rates, but inflation isn't where it needs to be. So not surprised the market hasn't really had much of a reaction to that. We've also had the UK unemployment, it's the claimant count change. So if you look at that one, it came out, where are we here? Came out at 32.3 off of a 23 forecast. So we were expecting it to drop by half of what it was last time, and it didn't get that. So nothing much off the pound on that one. The pound basically is more bearish today, which is good. But we've still had nothing out of Bailey at all. So these massive pushes that we've had, pound New Zealand's a bad example, actually. Pound US is probably better. So these big pushes that we've had, which have been going on now for a good week, 2 weeks really, seem to have stalled a little today. So we will see where we go from here. But that's the pound news this morning. So nothing particularly exciting there. Interest rates have been released for the Eurozone. Are we there? Afternoon, Brian. Sarah. Thursday, yeah. David, afternoon. Thank you for the $10. Good day, Goat. Thank you for your guidance every day. That's no problem. Thank you for the $10. I'm off on holiday next week, so I shall spend that on something. Where I'm going, there's an awful lot of... I'm going to Turkey, and they've got an awful lot of markets, basically, which are rip-offs of everything. So I might go and spend it there. Morning, XUpdate.news. Callum, how are we doing? Thank you very much for that. Much appreciated. So ECB rate 4.25 as expected. We weren't expecting anything different. We weren't expecting Lagarde to tell us anything different. So if you look through the press conference, which was at 1:45, this is the rate statement, basically. So there was nothing in the statement really of any impact, which we usually don't expect. This is where Barrier Man comes out and does his removal of the barriers for Lagarde. But the main thing that she said was inflation is to fluctuate near the current levels for the rest of this year, pretty much on par with what the Bank of England have said. They're expecting it to hold where we are. So it looks like it may be a slightly slower drop on the euro, potentially, based on what they're expecting. But we will be getting another rate cut this year. Apart from that, she didn't really say anything. So hence why there's not a massive movement in the euro today. So we've had a downward movement. Euro odds come down fairly hard. We've got the euro starting to fizzle off a little bit. Obviously, that was the Swiss franc pump yesterday. That was massive as well. So not a massive movement in the euro, basically. So we need to see what happens with the forward guidance moving on, basically. I think the CPI numbers is really what we need to focus on with the euro now. If they drop, it would indicate we're definitely going to get an August rate cut. But at the moment, we don't know. And Lagarde has let nothing out the bag. So more capital for the Big Mac account? Yep. If only. I don't go to McDonald's anymore. More of a Nando's man now. Afternoon, George. Yeah, basically nothing much out of the euro. So that is the news today. So there's been a lot of news, a lot of red news, but not an awful lot of market reaction. So the unemployment rate was forecast, hence not a lot of movement. The claimant count change is not that important. I don't know why it's red, to be honest, because it's more to do with unemployment rate we're interested in. The financing rate, we've got no shocks there. That's exactly what we expected. And Lagarde hasn't let anything out the bag. So it's business as usual, sort of like that for the euro over the next few months. And unemployment claims for the US dollar came out pretty much as forecast. We were like 20k difference, which is nothing. So that's it. That's today's news. So unfortunately, not an awful lot to look at today, as you can see. So Aussie dollar yen, we've got 5 minutes to the market opens. Aussie dollar yen, we've had an ADR hit on that one, basically to the upside. These yen pairs you kind of want to take with a little bit of a pinch of salt at the moment. So the Australian dollar, as you can see, euro odd, pound odd, and Aussie yen are the main sort of movers today. But I'd be very wary about trying to jump in on a short there. I think we're probably going to want to pull back a little bit more on this, but really, really no idea with this yen. It's very, very, very difficult to trade at the moment. Euro odd, lovely ADR hit to that one. It's an ADR hit to the downside. I'm already short on this. We're undoing the move from the last week. Make sure I've got my targets. I'm just going to move my target just above that propulsion gap. So that was my initial target down here. So I'm just moving targets up to here. So we're targeting top of that propulsion gap and that high. Need to watch this area here as well. But so this whole area basically is a potential support for a new leg up. But there's not really any reason we should get a leg up. We should be getting a leg down. If you scroll out, you see we're very much high, low, lower high, lower low, lower high. That's where we should be going. So I'm just being a little conservative because I'm off next week and I would like to be as flat as possible. So just moving targets there on all of those. But that is an ADR hit to the downside. So we've had the nice reversal and the retest. So there's your M pattern today. I wouldn't be surprised if we get back down to there tomorrow, to be honest, because they seem to be selling this euro off. And obviously the the strength of the profit take move is usually a hell of a lot faster than the climb up, and the climb up was pretty quick. Pound odd, that is also coming down at the moment. We've got an ADR hit on that one just about though. So again, same thing. We should be looking for a 38 to 50% retracement on that. So if you put a fib on it, we should be at least looking for this propulsion. So there's your 50%, there's your 38. So that zone there really is, if we are going to continue that way, and there's no reason we should, Bailey comes out and says anything about interest rate drops, this thing's coming down. So we're just waiting basically for Bailey to jump on board. But he's being very quiet. So those are your ADRs today. There's a lot of weekly range hits. So be careful with these weekly ranges on the Swiss. So yesterday, we had a massive move on the Swiss franc. So all Swiss franc pairs absolutely screaming. So when that yen intervention, second intervention kicked in yesterday, they piled into the Swiss franc as well. So, you know, I keep saying it over and over again, yen and the Swiss franc are safe havens, which is why I was scouring the news yesterday, trying to find out whether that was an intervention or whether there's something going on, which means that we should be piling into safe havens. So the yen and the Swiss both powered up. We've had more of it today as well. Not anywhere near as much on some of the pairs, but the Swiss franc today, Aussie dollar's pushed up on the news, really holding that level, the new level it's got to. So be careful with the Swiss. Again, this is why I'm not trading this at the moment and why I'm not trading the yen. They're just too erratic at the minute. With this market being so contracted, these movements that we get when we get these pumps are way over 225 ADRs. So just be very careful, but very high probability of a pullback on this. Bear in mind the Swiss franc is bearish. We've had two interest rate drops that they haven't told us about. Inflation has come down again. So there is more reason to drop interest rates again. So the Swiss franc should be weak. We should be seeing rallies against the Swissy, which at the moment we're not getting. So, but remember what the Swiss said. Remember what Jordan said in the last press conference after the interest rate change. At any point we deem fit, we will intervene in the Swiss franc by either strengthening it or weakening it at our discretion. So they have come out and said they will also intervene as well as the Japanese. Not sure why they need to, but they have come out and said that very clearly. So Swissy is a bit of a wild card at the moment, so just be careful. So you've got a lot of weekly extensions. Aussie Swiss there, CAD Swiss, Euro Swiss is also extended, Pound Swiss is extended, New Zealand Swiss and US Swiss. Obviously all the yen pairs. So if you cross all these off and look at which ones are not the yens and not the Swiss, because those are obviously intervention moves or very big, strong moves, you are left with Euro Odd and Euro CAD. So where are we? Wednesday, Tuesday, Monday. There's Monday's low. So there's your weekly range. So we've hit the weekly range and it's starting to undo that weekly move. So lovely entry there. You've also got the Euro Swiss. Sorry. Euro Odd, Euro CAD. Euro CAD also extended. So we've had a reversal alert on that this morning. So beautiful reversal there. Looking short opportunity. We've got the Euro New Zealand. Again, all these Euro pumps. So that one hit yesterday. And then we got the reversal basically overnight on the New Zealand dollar move. We've also got the pound odd as well, which is pretty much the same as the euro odd. So again, coming down. So all these weeklies that are not Swiss and yen related, all starting to play out very, very nicely today. Nice mean reversions on the weekly moves. Monthlies is very similar story. It's yens mainly and Swiss. So kind of ignore all of those. Pound CAD is a monthly hit, as is pound New Zealand and Aussie New Zealand. So that's done its monthly range already. So it's basically that move, isn't it, for the last couple of weeks? So, which we know because I've been in it. So those are your ADRs. RSIs, there's only one, which is the pound Swiss on the hourly, which is a hit to the downside. Again, absolutely no reason why that should be pumping at the moment, because Bailey hasn't said anything. That's why. But so yeah, be wary about taking that. Bailey, as soon as Bailey comes out and says anything, or anybody from the Bank of England for that matter, about what's going on with interest rates, if they mention cuts in August, it's gone. But we're getting very, very, very close now. Look, yeah, it's not next week; it's the week after. Unfortunately, I know I will be here. Yeah, I come back on Tuesday, so I will be streaming on possibly that Wednesday. To figure out what time my flight gets in. But that's where the Bank of England statement is, 1st of August. So traders are pairing in basically a 25% chance of them cutting rates. It was 100% according to Bailey when we hit 2% target. So who knows? That'll be an interesting one. So there's your news. There's some 4-hour RSIs as well. Let me just go back to the market, see what the market's done at the open. So NASDAQ has broken short. Dow has broken long. Earnings-wise, today is the 18th. We have had Abbott's, Blackstone, and TSM this morning. We got Netflix after market. So there may be some movement after market. 9 o'clock tonight, just before the market shuts. Just be aware of that one, because that way we may well get a massive spike in the indices literally 5-10 minutes before market close this evening. Tomorrow's Amex. So really it all kicks off next week. The week I'm not here, which is lovely. So yeah, next week is when the market really kicks off for earnings. So pre-market range on the NASDAQ was too tight, so opening range being taken on that one. Short S&P, long on the Dow. Opinion more on DAX short, mid, long term? Don't know. I don't pay any attention to directional bias on indices. They're always long, always. The bias on indices is always long. They're manufactured to go up. That's all they do. They go up. Yeah. Indices go up. That's your bias. If ever you want a bias, it's up. It's never down. It's up. But every day is random, completely different. So I don't pay any attention to mid, long, short term, because it's nothing. There's nothing you can do to control that. It's just stock movement and it's random. Afternoon, JC, Peter. I wasn't able to start a position trade at EA. I was telling you 2 weeks ago the buttons are not working, but it also didn't take any trade. I don't know what else I could try. I don't know. There seems to be some kind of problem with your platform. There's nothing wrong with the EA. The EA was working fine. If you're having problems with it, it's isolated to your end. So it's if the buttons aren't working, if the buttons aren't working and it's not taking trades, auto trading isn't turned on. So you've got the auto trading button at the top, which gives you that smiley face, or in the inputs in the common tab, you've got allow live trading, which may be unticked. Other than that, if you put the EA on a blank chart with nothing on it and press those buttons, it trades. That's it. There is nothing, that's it. If it's not taking trades, you need to look at your logs. So go into your journal tab and your experts tab and just check for error messages in there. Journal and experts, which you can't see, but down here, you've got the journal and experts tab. Other than that, I don't know. I don't know. Can't help on that one. I hear Turkey randomly got really expensive. I'm going all inclusive. I won't be spending a penny. Well, I will actually be buying boat rides and that sort of stuff. But hot out there at the moment. Very hot. The whole of Greece and all that area is just ridiculous. Ridiculous. What are your targets on EU and GU? So Euro, US dollar. At the moment, I'm targeting. So it's up to you. Depending on how your month is going. My month at the moment is not going great. So I'm holding longer. The beautiful thing about going on holiday is you don't look at the charts all day long. So if we get 2 big down days, brilliant. But this propulsion area down here is target 2. That's target 1. So that would be the first port of call, which would be roughly 38 retracement. That's just over a 50% retracement. But there is absolutely no reason, I don't think, why we should be buying the euro at the moment. The US dollar, mystery. The Fed have got no idea of that. Euro odd 125 ADR. So yeah, I don't know about the US dollar. That's the only fly in the ointment at the moment. It looks to me like we're going to get a rate cut in September now. So that would indicate that we will see some bearish movement starting to creep in to the US dollar. But we have already had a rate drop, and we are definitely getting another rate drop at some point in August or September on the euro. So the euro is definitely bearish. So you look at this sort of expanded out a little bit further, you can see that we are ever so slightly in decline at the moment. And that is really the way we should stay from a fundamental perspective. So the US dollar is going to be a very, very tricky beast over the next 3 to 6 months, because we've got a potential rate cut coming in September. 2 months later, we've then potentially got Trump getting in. Trump was great for the US dollar. Good for the economy, make America great, put America first. It's all about making money and strengthening that dollar. So if Trump is going to get in, that's the direction of play. If they're going to drop interest rates, it's going to make it slightly bearish, but the euro, I think, is going to be more bearish. So I would say if you go back and look at what happened here, I don't think it will be as severe as that, but that is what I would expect to see over the next 12 to 18 months. But this market at the moment is very schizophrenic, isn't it? So, but I'm targeting down here at the moment. But if that makes you money and you're happy, get out there. Watch this high. Got this accumulation here. That little propulsion gap there would be second target down. Other than that, we're coming down to test that high, which means that propulsion gap is on the cards. And I think that's doable. Pound US dollar. Just taking part of the Dow off. We've just run into that propulsion gap on the Dow. Basically, it's yesterday's sell-off. Sorry, not yesterday. This morning's sell-off in the Globex session. So there was a big sell came in. We pushed back up, retested it. Bears walked away again. So we've just retested that. So there's likely to be some sell orders sitting in that level. As you can see, looks like we've got limit orders triggering. So target was here. I'm not going to risk that amount of movement just to hit a TP line getting out. So we'll see. If it doesn't hold, we're obviously going to come up and retest the high of the day. So nice drop on the NAS and the S&P as well, which is another thing that makes me slightly cautious about that, because obviously if the weight of the market is bearish, this is going to struggle. So we'll see. NASDAQ, downside target. I'm just going to move up slightly. So I'm just pulling that back up to just under 2R, that's yesterday's low. So I'm just making sure I'm going to take profit in case we get limit orders trigger at yesterday's low. Pound US. Just tricky. Is it very much the same as the Euro US? We are expecting that interest rate to drop. The Euro's already gone. The pound should have gone at 2% interest rate. It hasn't. 2% inflation, sorry. It hasn't. So I'm expecting this to drop. We're waiting for some confirmation from the Bank of England. The last thing the Bank of England said when we got the interest rate, when we got the inflation figures was, yeah, it's brilliant, we've hit target, but that bit didn't. The market had already factored a rate drop in, which is why I think we're seeing this, because the market has had to scale out some of its position because it went too early. It was expecting Bailey to say, well, first of all, there was the option of July, but definitely in August. Now we've said may not go in August, we might go September. So it's like the Fed, we're just jumping back and back and back, which makes the currency go, ready for the interest rate drop? Oh, it didn't happen. Ready for the interest rate drop? Oh, it didn't happen. Look at the US dollar. Oops. Yeah. Are we? Aren't we? Are we? Aren't we? Are we? That's what we're getting on this at the moment. So the US is doing that. The pound is also now falling into that trap. So target-wise on this, we've got this high coming up, which I don't think we will test. We may do. It's going to take some negative news from the US to get there. So we are massively stretched here. We've got beautiful double extension on the 4-hour RSI. We've got the daily way up above that 70-75 level. Again, it's one of those levels, you know, the 80 level on the daily is just, it's like rocking horse poo. Just so rare. Doesn't exist. But it's massively rare, yeah. So we're very, very, very close to a very large stretch and extension, which we don't usually get. So when you see we get up to this sort of level, you always get a pullback. Yeah. Got one there. One there. One there. Yeah. 100% strike rate. You always get a pullback. It's just when. So we're just waiting at the moment for really either some bull news from the US dollar or Bailey to unwind this. This was this. So this is this month. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of 12 days bull this month. Unbelievable run. So we've coincided some weakness in the US and the CAD on the interest rate drops with on the CAD interest rate drop with no interest rate drop on the pound and a possible pushback. So it's just the perfect storm. This is what squeezes are. They're when fundamentals fall in line with the complete opposite direction you got into. There's nothing you can do about it. You can't time them because you don't know they're coming. So, yeah. But target-wise on this, I expect it to fully undo at least 50% of this move. So at the moment, my average is 125 ADR. If we do break that low, that's going to be an obvious market structure shift, the old head and shoulders. So I'll be looking at that target. So this is really where I'm looking at. At the moment, I'm down here. Not going to get that, I don't think, by any shape of any means, basically. But yeah, so I'm unsure. So at the moment, I think I'm probably just going to adjust to 50%. And see if we can achieve that, which should be fairly decent and doable. But that area there, which is last month's high, you will, because we've broken out of that for 2 weeks now, you will find limit orders ready to trigger and rebuy that high. So any bulls that are on that will be looking at this and going, we'll add more in here. So it's going to take a hell of a lot of bears, a news event really, to drive that through that level. So be careful of that level there, which is about 128,600. That's where I'll be watching. Okay, so We are finding resistance in this propulsion at the moment. I hear Turkey ran. I already said that. Hello, everyone. My first live. Welcome aboard, Ahmed. ExoUpdate.news. What happens if I have different EAs on different profiles? I don't know. I don't use profiles. Basically, when you switch profiles, it reinitializes your terminal. That's all I can tell you. So switching profiles is basically the same thing as shutting your terminal down and reopening it. So if you've got the same account, got different EAs running, and you do it on the same account, that's going to really confuse everything. RSI2 has been tough. Yeah, at the moment, because it's if you're trading RSI2 on the pound pairs, yeah. So yeah, that's a 90 level there, isn't it? So you'd have been in there. You'd have been in there. You'd have been in there, there. You've been in all the time, going short and getting stopped out permanently. So squeeze, mean reversion doesn't work. Well, it does work in a squeeze. It doesn't work in a squeeze. That's a lie. Mean reversion works in a trend, works in a range, but does not work in a parabolic squeeze. Nothing works in a parabolic squeeze apart from a breakout if you manage to get onto it and you can hold it. How do you access the properties of the Trade Manager dashboard? There's no smiley. You right click. So just right click, indicator list, and then select the indicator. It's an indicator. It's not an EA. Afternoon, Abdi. Afternoon, Chucks. Just got back from Turkey. Have you really, Reverend? Was it very hot? One of my friends has just got back from Turkey, not last week, the week before. He landed in 36. It went up to 40, and then it came back down to 38 for the entire week. Bear in mind, I'm leaving the UK on about 20. That's going to be hot. Afternoon, Gregors. Let's just go back to the indices a minute. Just want to watch what this NASDAQ and this S&P are doing, because it's we seem to be completely inverted on those today. Completely opposite, mimicking each other at the moment, those two. My smiley face is a sad one, no matter if I allow live trading is checked or not. Then you've got a problem with your terminal, tralala. I don't know what to say. If you have not got a smiley face there, and you've got live trading there, and you've enabled auto trading in your terminal, tools, options, expert advisors, allow automated trading, that's it. There is nothing else to do. If it's not working, there's a problem with your terminal, or your broker has disabled EAs, or I don't know, something. But it's not the EA, it's something your end. I've never heard of it, so I don't really know how to help you with that one. Google or contact your broker. Last time you wanted to share something about the round number hedging strategy. No, I didn't. Somebody sent me a round number hedging strategy. I wasn't going to show you about it. Was I? I don't know. Basically, I think I explained it in quite a lot of detail, actually, when I was talking about it. It doesn't work. Just gets you into massively wide hedges that eventually you will get out of at some point, but you will be stuck in them for weeks and months on end and never get out. So, not for me. Are you with a prop firm? No. Oh, yeah, you're talking about the large problem. I haven't enabled auto trading. Go. Now it's fixed. and have ever seen this guy. No, what that means? Could be broker. Yeah, you done it. He's fixed it. He's fixed it. Hello, have a good day. Thank you, Isma, and you. So just see how these markets play out in the next sort of 10 minutes or so. If there's any FX pairs specifically you want to look at, let me know. But I'm not going to go through all the pairs today. I did that yesterday. Yesterday was another crazy day. Another suspected intervention, another Swiss franc safe haven run. So it's really a case of, at the moment, everything should start now, as you can see, should start to unwind and start to sort of undo these moves. So squeezes should be easing a little, hopefully. That pound's really stuck again. Stuck. I haven't moved anywhere today. So upcoming news for the rest of this week. We've kind of had everything this week. We've got daily speaking later. Every time anybody from the FOMC opens their mouth, there is a possibility of the market reacting to it regardless, because every time one person says we're going to do that, the other person comes out 10 minutes later and says the opposite. So there is a chance you might get some kind of spike, but that's 11:05 p.m. So that's tomorrow. We've got retail sales for the pound tomorrow morning. I'm on at 7:45 tomorrow morning, so we'll have a look at what's happened with that in the morning. But this one basically is a real mover at the moment. For some reason, market's moving on retail sales. But it's if you look at the last couple of releases we've had from the US, we've had some fairly decent movement off of it, but not continued movement. It tends to be a spike. So yeah, basically watch that one tomorrow morning for the pound. We are forecasting a absolutely massive 3.5% drop month on month in retail. I can't see any reason why we should get a 3.5% drop in June. We're in July now, so we're looking at June's figures. There's no reason why, coming into the summer, we should be massively dropping in retail, but that's what they're forecasting. I think we're probably going to get a bigger number than a negative 0.6 on that. So we might get some slightly bullish movement on the pound tomorrow. So if you've got profit on the table, it's worth taking that off ahead of that news, just in case it does spike if you're short. And then tomorrow we've got the Canadian retail as well. So again, watch that one. We're expecting quite a big drop in the Canadian as well. So we're looking at a 2.3% drop in Canadian retail month on month as well. So be interesting to see what happens with those figures tomorrow, but potentially a big move off of retail. Last one we had with the US was a big one. So we'll see what happens. But that's the rest of your news this week. So there's nothing much else. Just covering next week, because this is my last afternoon session today. Monday is a bank holiday. It's not a bank holiday. Monday, there is no news. I'm off on Tuesday. Yeah, so I'm not here on Tuesday, and I'm off for the entire week, back to Wednesday the following week. So Monday, I am probably going to do a stream 8 o'clock Monday morning, and that'll be the last one. And we'll just have a look at the week ahead and have a quick peek at what's coming up early next week, because we've got CPI is actually on Wednesday. That's fine. So yeah, we'll have a look at next week on Monday morning at 8 o'clock. Market's pushing back a little at the minute. Did you start using RSI2? Yeah. So to start off with on RSI2, because it's a new strategy, I don't usually trade it on a big live account. So what I've done is I've opened a Cent account for it, just to test it, because a Cent account allows you to basically simulate a normal account. But usually I give forward testing about 2 months, if that. RSI2 is a little bit different because I've done an awful lot more back testing on RSI2 than I have on most other strategies I've ever developed. And the reason being is because I've built 2 separate EAs for it. Well, I haven't built 2. I've used the Position Trader EA to back test it. thoroughly. So I've robustness tested it with somewhere in the region of 40 to 50,000 robustness tests on it. I've also built the other EA for my friend who wants to trade it in a slightly different way with different exit criteria. I've robustness tested that as well on the daily, and that came out very, very profitable as well. So I've done an awful lot of testing on it. So I want to test it live to make sure that more importantly, the EA executes. That's the important thing. So I want to make sure it executes correctly as in the back tests. But from a robustness testing perspective, forward testing, the problem with forward testing is if you get the first month negative, you suddenly go, there's something wrong. Yeah, so you should really give it 2 to 3 months to play out to make sure that you get a bad month, you get a good month, a mediocre month or whatever. But if it goes bad month, bad month, bad month, if you look at the back test and that's never happened before, that rings alarm bells. Yeah, in the back testing, there were periods of every year there was 3 months of drawdown. Yeah. So, and that's on squeeze markets, which you can't avoid. So this is a squeeze month. So the RSI2 strategy has not been doing particularly well. S&P rallying quite hard. But I want to live test it probably for about 4 to 6 weeks. Just see what happens. So, you know, if you look at the back tests, you get these big drawdowns and they're quick as well. And the reason they're quick is because you're trading multiple currencies, multiple currency pairs in the same currency. So, for example, at the moment, the pound is squeezing. So you don't just lose on the pound US, you lose on the pound CAD and the pound odd and the pound New Zealand if you're trading that as well. Yeah, so that's 4 lots of drawdown. So if you have 3 trades go against you on each of those currencies, yeah, that's equivalent to somewhere in the region of 6 to 12% drawdown on that one currency. So you can't really judge it on 1 month's performance. I'll leave it running. It's running on live funds so that it's not running in demo because you don't get the same trading conditions in demo. You've got to run it on a live account. But the advantage of a Cent account, obviously, is it allows you to mimic the right trading conditions. So I can see the lot sizes are correct and basically it's executing. SIH has traded all 5 index today. Cool. Good man. I know you're not trading yen and Swiss pairs, but what New Zealand pairs are you trading? Aussie New Zealand, I'm not trading. I'm for the New Zealand pairs, I'm not trading Aussie New Zealand. I'm trading Euro New Zealand. I'm trading Pound New Zealand. I'm trading New Zealand CAD. New Zealand US. In fact, I'm not trading New Zealand CAD. Yes, I am. We just haven't any signals on it. Yeah, I am. Yeah, so anything New Zealand is fine, just not not Aussie New Zealand. Again, super squeezy. One of these guys is going to be dropping their interest rates before the other one. When that happens, this thing's going to go parabolic. Might be fun. Just in a strategy test, they're testing 21 RSI on H4. 21 RSI on H4. Yep. Entering on H1, 0.5% risk. Targeting 0.5 single and 1% multiples. The drawdown is really low. Yeah. I mean, that's why I don't, depends what level you're using to get in at, doesn't it? But that's why I don't use the 21 on the 4 hour. I use the 14 because the 21 on the 4 hour will hardly ever give you an entry. There's one there and there's one there. If you're looking at 80-20, that is, there's one there and there's one there. Yeah, so you've had 4 trades since the 1st of May 2023. There's a trade a quarter. Definitely going to be low because you're not going to get many trades. And they are very, very extended. But that is the same as switching to the RSI 14 and using the 90 extension, pretty much. You know, this is the thing. I've said this about in here before. I can give you a strategy with 100% strike rate, not a problem at all. Yeah. You would need to take somewhere between a 5 to 15% risk per trade to make it actually pay your bills. And you'd crap yourself when it got in. But you could do it. So, you know, I've said it in here before. H4, yeah, 14 RSI, use 90-10 or 80-20. But 90-10, yeah, you hardly ever get a trade, but it will never fail. Never fail. Yeah. So look at it yourself. Go and back test. And Aussie New Zealand's totally the wrong pair to use for this. Let's use pound US. So you know when you get these massive extensions above the 80 level on the 14, yeah, it's very rare that you won't get at least an ADR pullback off of them. Very rare. You'll get the odd parabolic move, which you will have scaled into, which is fine. But that one, parabolic, that one, yeah. I mean, it always gives you something at some point which will get you out of the trades. But you got 1, 2, 3, 4, 5, 6, 7 trades there in a where are we? May, June, July, 14 months, isn't it? So it's one trade every 2 months on average. But you will also have to take a slight drawdown on it, but it'll be very low because it's very, 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 very hard for the market to stretch that far for that long. Don't forget, we're looking at 14 4-hour candles here. And we're looking at the relative strength solid for 14 candles. Yeah, it's got to go very, very, very far and hard in one direction. 21 is even longer period. It's got to go even faster and harder and take off at a bigger, steeper angle. Very rare. But if it does that, the market is absolutely exhausted. It will have eaten every single order of liquidity at every price point on the way to achieving that reading. There won't be anybody left up there. There is no direction left. Yeah, it will work. But you think of it like a rocket taking off with half the fuel it needs to get into orbit. Yeah, it doesn't survive. There is no fuel. There's no, you know, don't forget this is a marketplace. Every single tick on this chart is requiring a buyer to be offering a price and a seller to be willing to take that price. And they will either jump up and take it or they will jump down and take it. If you jump up for 3 days solid by 200% of its average daily range, no one up there is going to be stupid enough to go, yeah, right. They just don't do it because they've all taken price at some point in here already. There's nothing left. So this is why the relative strength index is so good, because it's showing you price and why everybody hates it, because they don't understand what it's doing. They just think it's another oscillator on a chart. It's showing you the momentum and speed of bank orders. Yeah. And there is a certain amount of money that they can burn a day. When they've burnt it, it's gone. So yeah, it's very, very, very good. But yeah, use that. I mean, you can fine tune this how you like. The RSI 10 I really like as well. But look at the RSI 10. Yeah, and look at every time it's hit the 90 and 10 level. It's the same thing. So all you ever do is when you change the sensitivity of your indicators from a 10 to a 14 to a 21 or whatever you change it to, all it does is it makes the line either go further up or further down on the graph. That's all it's doing. So all you have to do is adjust the number that you select. But the problem is you're curve fitting it to what's happened in the past, which is why it's dangerous to do it. But and that's why I settled on the 14. But I settled on the 14 like 8 years ago. Market conditions very different now. Yeah, everything works and everything fails. But the further you let the market go, look at the weekly dash. Yeah, look at these average weekly ranges. We went through all of these this morning, didn't we? Or this afternoon. Yeah, virtually all of them are starting to play out, because to get a whole week's worth of movement done by Wednesday or Thursday means that the market's been pushing very, 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 very hard in one direction all week. Yeah, which is not normal, because the average is for them to do that much. If it's done more than what it does on average, it means there's been something that's pushed the market too far, which means you're going to start to run out of people on the other side who are doing what they do week in, week out, which is why it tends to mean revert. So, you know, you could completely replace the RSI with, on a higher time frame, on the 4-hour chart or the daily chart, with the average weekly range. On the daily chart, you could replace with the average monthly range, because if this lights up to this is akin to the 70 level, the 80 level, the 90 level. You get to this level, yeah, something has gone really wrong this week. Yeah, which means that there'll be a lot of banks and institutions with a big fat P&L. And the only way they can get that P&L off their books and into real hard spendable cash on Ferraris is to take the other direction. So this could be a complete replacement for the RSI if you want to. Like I said, there is no right or wrong indicator to use in position trading. Position trading is all about finding an extended condition in the market and waiting for the banks to profit take the move. How you use it, which number you use, whether you use an RSI, a stochastic, a MACD, a CCI, a weekly range, ADR at 180, 175, whatever, doesn't matter. What we're looking for is, Jesus, that's gone a long way. That's all we need to know, isn't it? It's gone too far. That's what mean reversion is. So you can pick whatever you like. And you will always find in the backtesting, there will be a level on an indicator after you've tweaked it, which will give you a similar result to a different level on a different indicator, as I've just shown. So if you suddenly go with the 14, you change the 14 to a 21, where I use the 14 at 85, on the 21, you might use the 80. It will give you roughly the same thing, because all you're doing is you're adjusting that line, aren't you? All the same stuff. Just squeezed. It's moved. Nasdaq is RSI2 extended on the daily, so short it or long it. I don't know, whichever. I don't trade RSI on. Hedged on the S&P. I'm just moving my stop underneath price on the Dow. We've just hit the highs, so the limit orders are starting to trigger. I got $750 there, which that hedge is 260, so that hedge is paid for. Just want to safeguard that. I don't want it to come down and unwind, because obviously this might go wrong. But yeah, if the Nasdaq's extended, then yeah, it'll be extended to the downside on RSI 2 because push down. So buy it today and look for an upward move. That's what it was initially designed for, RSI 2 strategy for indices. EuroCAD, Rico. EuroCAD shorts at the moment. Coming down nicely. So we're looking for a pullback on this leg. So, yeah. We're looking for a pullback on this leg if they're going to continue to do that. However, if you scroll out a bit, we're putting in a lower high here, but we've been putting in higher lows. So it's basically a contraction going on at the moment. Should be bearish. But obviously we've had a weak CAD and weak US. So again, interest rates for the Canadian dollar again, changing. So I'm sure, but I would also not have a problem being long on this at the moment because these are both bears. Don't forget, these are both the first two to go. Euro and CAD went with interest rates first. So we're now waiting to see when they drop the next one. So they're both bearish currencies. A bear against a bear gives you a range. So it could go either way, but I'm short at the moment. Just waiting for this huge move on the euro and the pound to calm down and for them to get it undone. But we need some news. We've got no news. The euro news today, I was hoping was going to do something. It does look like it's weakening the euro nicely, but it's not as much as I thought. It's 80-20. It's barely ever going to enter, but when it does, it works. Yeah. Happily run it on Swiss pairs too. I mean, if you look at the something like the Aussie dollar Swiss with 80-20, I mean the 4 hour 80-20. If I wanted to do this as a part-time income, i.e., a kind of pension fund, the 4 hour 80-20 RSI would be the strategy that I would use. It's not going to make enough money to pay the bills unless you use very high risk. And if you use very high risk, you do run, obviously, the risk of going pop. But even on the Swiss franc pairs, which we know are ridiculously erratic, you've had one signal there, which failed. So you would have got in ADR 36. You'd have got about half an ADR out of that, which isn't enough. So you would have got in, you'd have had to do probably 4 on that to get out. Yeah, you then got another extension there. You'd have sat through that one for a week, and then it collapsed. You had an entry there. You had an entry there. You had an entry there, which I got in on. You had an entry there. To the downside, you had an entry there. You had an entry there. Not sure what that was. Was that the Swiss franc? Sure what that was. Oh, that was a safe haven run for something, wasn't it? What was that? Can't remember. There's a safe haven run, wasn't there? Can't remember what it was. There was an entry there. There was an entry there. There was an entry. That's an interest rate change there. So that one, well, you were extended and then you got an interest rate change against you, but it undid straight away. And there was an entry there. Right, so that one, unlikely you would have got out on that. So that would have been a scale in, probably 2, maybe 4 positions. So if you look at the Swiss franc compared to all the other pairs, you'd need possibly 2 to 4 positions in a trade, 2 to 4 trades in a position. Yeah. So this is what I mean. You're not going to get enough entries unless you use high risk. If you use high risk, you're going to, at some point, have to take 4 trades. So imagine instead of getting in with 0.25 or 0.5% risk, as we do at the moment, and getting in with 1 to 2% risk because you're not going to get many entries, and then having to take 4 positions with the initial risk being somewhere between 1 to 2%. That first trade, the first trade on its own would be somewhere between 7 to 10% in drawdown. The other 3 would be clocking you up to 15 to 20% on an individual instrument. See why I don't do this as a, this is kind of as close as you'll get to the Holy Grail strategy. RSI 14, 80, 20. Fantastic. but it's not infallible. It's not infallible here, look. Tiny little one there. Look at this. So you got in basically where my average is pretty much. Look. So there was an entry there. You'd have got out on that. Easy. Then as an ADR, you'd have got out on that. Well, I would anyway. So that was your first entry. So you got 1, 2, 3. I got in with a fourth there because it pushed quite hard. And now we're getting out. So my average is there because of that trade. So if you remove that trade from the equation, the average will be kind of here. So you're in 4 positions, and that is off RSI 80. It's not infallible, is it? But, I mean, it's very likely this is going to unwind, isn't it? I don't know. There is no right or wrong, but there's always better. Yeah. What other courses you do out there will teach you strategies and setups. And a lot of courses teach a scaled setup. So you'll have a setup where this condition's got to be right. Then you need a signal like that, and something else has got to be right. And if you've got that as well, it's excellent. So you get a 5-star strategy. So if something pushes like that, it's 1 star. If there's another indicator that confirms that that's pushed up, which is usually telling you the same thing, that's a 2-star. And then when the signal kicks in, you've got a 3-star entry. But if you've got divergence, it's now a 4-star entry. And if it's at a previous resistance, it's a 5-star entry. RSI 14 on the 4-hour chart above the 80 level is, I would class as a 4-star entry. If you get above the 90 level, sell the crap out of it. Put your mortgage on. It's not doing that any further. And if it does, give it 2 or 3 days and it will stop. Yeah. But you don't get those 5-star entries. That's a proper 5-star entry. That's a stick the mortgage on it entry. That's a we're going parabolic entry. But look how many times you're going to achieve it. It's got to be. There isn't one on that chart there. Mind you, ADRs are contracted at the moment. So there's one there. Boing. 4 weeks. Straight up. Don't think you'll find many of them. There's one. Funnily enough. Right now. Yeah. That's why I'm holding this. Just doesn't get there. Does not get there. Look at the times it gets to the 80 and what it does after the 80. At least that. Or that. Or that. Or that. Or, you know, worst case scenario, that. That. One there. One there. Yeah. We're coming down. We're definitely going to test that propulsion gap. We're going to get a 38 retracement on it. Bare minimum. But from a 90, there's one there. Mortgage, paid. There's one here as well. You can't see it. It's behind my head, but it's that. That is also a 90. That's a 10, obviously. It's not a 90, it's a 10. 100% strike rate. Okay, now bought NASDAQ, good. Well, I hope it doesn't go up today because I'm short. So I hope you're wrong for an hour or two, but then you become right. That's the perfect thing to happen is RSI2 is extended, it comes down and double bottoms. So I get out of my short, I make money, ting, and then it bounces on the limit orders at the lows and pushes up into there and you make money, ting. We both trade in the opposite direction and both make money. Ta-da! Easy, innit? Also in pound US dollar sell. Yeah. I'm already in that. Do you talk to your acquaintance about availing an EA with his strategy on MQL5? Yes. Still talking. The problem is, although I built it, I have a very, very similar product. The Position Trader EA trades the strategy virtually the same way. It's got different risk parameters because he has different risk parameters. And it has a different exit criteria in it. But apart from that, it's basically the Position Trader EA. A lot simpler, actually. But if I sell it on MQL5, it's going to dilute his sales. But he's not a marketing man. I'm not a marketing man either. But he hasn't got a web presence set up. He hasn't done anything like this before. He's a banker. So, it's not his area of expertise. So I'm still talking to him about how to do it. He's struggling at the moment, he won't mind me saying this, with his website from a perspective of copy and writing stuff and explaining things. And I think he's realizing, my website, how big my website is. This didn't just happen overnight, all of this stuff. This took a long time to build, get all the content together, create the content, write it, do the videos, If you wanted to set up a website like this from scratch right now, you're probably looking at 2 to 3 months of work. He's realizing now what's involved in getting this up, and then you've got to drive traffic to it. So I've said to him, why don't you just stick it on my website and become part of this? So there's that way to go as well. But it does mean that then I would annoy everybody, because I said to him, if I release another EA that is the RSI2 strategy, everyone's going to get annoyed and say, well, why can't you just put it in one of the existing ones? You're trying to make more money. And I'll just get heckled by everybody for doing it. So I've got that part of it where I'm like, not sure I want to do it. So talks are ongoing, Mumo. Put it that way. I'm not worried about the financial part of it. I'm not in it for making money out of it in a big way. But obviously, if I put it on my website and I launch it on my website, I've then got to support it. And I have bucket loads of Telegram and Discord DMs constantly anyway. So extra workload for me. But then I can pass it on to him, I guess. When I have turned DD off, no matter what levels an instrument I test, it can easily get between 40 and 80% of drawdown on a single instrument. Yeah. Yeah. It will do. This is why we have drawdown control. It's not an option, drawdown control. And then people that think drawdown control is an option soon find out it's not an option. It's a necessity. These red lines on here have stopped me blowing my account. They have to be there. You can't not take loss. Part of the game. You're going to have losing months. Sometimes they're going to be small. Sometimes they're going to be big. You're going to have big winning months, which are way going to pay for the losing months, but you've got to take the losses. So if you trade, although I'm saying that, if you trade one instrument, or if you were to trade maybe 4 instruments, there's an argument for not doing drawdown control, or at least delaying drawdown control to 2 or 3 times what you would normally do it at, because your account can sustain it if it's only got 3 or 4 instruments running on it, and they've got to be completely uncorrelated. Problem is, you've also got to make sure that they don't squeeze at the same time. That is not in your control. So if you get 2 things squeezing at the same time and you just happen to be in both of those trades at the start, you're in trouble. But if you're running a 4-hour, if you're running on the 4-hour time frame, your entry is going to be a hell of a lot later than the hourly. Yeah. One of the things I'm finding at the moment with this particular month is I switched when we I can't remember when it was I switched from H4 to H1. Must have been 18 months, 2 years ago. When the market started to contract, I said, look, we're not getting any H4 entries. There was a month or 6 weeks we went through in the live room, and we got, we looked at the dashboard every day. You got 150 ADR on Euro odd. Went down nicely. So we looked at the dash for H4 RSI, and the thing didn't light up for weeks. If it did, you just about got a 70, and that was it. And then when it was off 2 candles later, it was gone. So I said, I've got a flat P&L. I can't get into anything. If I can't get into trade, I can't get any risk on. I can't make any money. You've got to have risk in the market to make money. So I switched down to that, and I said, I remember saying it clear as day because it's very important to remember. When you drop down to this time frame, you are trading more chop than this time frame by 4. Yeah, this time frame is 4 times smaller than the 4-hour time frame. Your chop level goes up by 4. When you drop down to M15, it goes up by 4 again. When you drop down to M5, it goes up to just pointless because it's just orders. Yeah, so the market structure and the confluence and the signal strength and everything collapses as you go down in time frame. And I've become so accustomed to trading on the hourly time frame. And since it's been tough this year, I've been thinking about why it's been tough. I've been looking at my P&L, looking at the trades I've got into, and I've been doing nothing wrong with my trades. But I've been getting into the squeezes and the moves way earlier on the hourly time frame than I would have on a 4-hour time frame. So if you look at this, or let's take this one for an example, Euro odd. Yeah, it's a bit of a squeezy move. First entry was there. Yeah. If you switch up to 4-hour, zoom in. Yeah, your first entry would have been not much different on this one, to be honest. It's not a lot, actually. But you probably would have got in on that candle. If not, you definitely got in on that candle there. So the difference between that and that doesn't seem like an awful lot. But when you actually measure the distance between that, 3/4 of an ADR, it's one less trade. One less trade across all instruments reduces your lot sizing down by X%. In this case, it would have been, got 5 on, so 20%. So I'll be taking 20% less lot size over that squeeze. Yeah. Which means one less drawdown. One less drawdown at around about 0.5% or so times 4 or 5 instruments. You're not hemorrhaging 2-3% that you would have been. And it makes a big difference trading this time frame to trading the hourly, because the hourly gets you into way more entries a lot faster. Yeah. You get embedded on the hourly time frame a lot more than you do on the 4. So something I'm considering is switching back up to 4-hour. I'm going to have to think about it while I'm on holiday and do some... She's not listening. I'm going to do some analysis while I'm on holiday. And then might come back and just switch back over to H4. But you know, the 70 level on the 4-hour, I've never really liked it. The 80 level, I really like. So you're going to get a lot less entries, but you're going to get in a lot later. The other thing I'm considering as well is what I said earlier, basically, is looking at the weeklies. Because I've got now the Position Trader EA, if I'm having a light week and we haven't had many H4 entries, I'll start taking weeklies. So if we get a weekly extension, an AWR extension, or an average monthly extension, I'll just hit the buy or the sell button manually, and we'll get into the trade in that respect. Well, it'll be a sell stop or a buy stop. Waiting for strength to come, but getting in that respect as well. So just while these markets are like this, because the contracted ADRs, I think, are going to start to expand. And I'm a little bit worried about getting into too much too fast, which can be very painful. So, but I'm going to have a think about it. And which is why I've been looking at RSI 10. Somebody mentioned RSI 10 on the 4-hour a while ago, and I did some testing on it, and it's actually pretty good. But it's only been pretty good for the last sort of couple of years where we've had contracted ADRs. So you look at these ADRs at the moment. Remember I said we've been sitting here under 100 ADR on a lot of this stuff. We've now got 100 there, we got 100 there, we got 100 there, 100 there, 178, 123, 151. We are starting to expand, but this is mainly because of the yen moves. We've been stuck. And now we seem to be starting to expand out more. We're getting more, if this plays out, whichever way it goes, this is proper market structure. This is the crap we've been trading through for the last 6 months. This is the crap we've been trading through. This, getting back into proper market structure, is what we need to make money. So if it starts to pick up and move, then brilliant. But, this sort of stuff is great if you can get the signals. But You know, you had one there. That's it. There was a signal there. Can't see it. It's behind my head. That's it. Look at it. And then you've had one here. It's dead, isn't it? So, but it is starting to pick up a bit. RSI 10, my favorite. Yeah, David, I think it might have been you that said about it, actually. But there's not a massive difference if you look at it. So if you have a look at, I'm just quickly changing something there. TP hit on NASDAQ. So I've got another terminal running over here. So there's your low. That's yesterday's low. Well, we haven't quite hit it, but I've was shy. So TP hit, protected the second half. So yeah, so if you look at the difference between the two, it's not massive with the 10, but like I said, you just need to look at the levels because we're only looking at 4 candlesticks here, 16 hours. That's the difference. Yeah. So you get into a few more of these, look, which you wouldn't have done on the 14. Yeah. So there's more signals, which always worries me because the more signals usually means more less strength in the signal, basically. But if you look at these, that if you didn't get out on it, you had a 2 entry exit. You got one there. If you didn't get out on that, you got 2 entry exit. That one there, easy. That one there, easy. This one here, holy crap, but out now. So you'd have got in later. So you got in, I got in down. Sorry. I got in here. You would have got in pretty much the same spot actually on this one. So you still would have done DD control on this one. But you're out now. Look, it's in profit. But yeah, brilliant. RSI 10. But it just allows you to get in and out a little bit quicker. But I need to do some proper back testing with the Position Trader EA on it, really. The other thing is your DD looks like it's been done right as prices turn on a lot of charts, perhaps increasing drawdown percentage before cutting. That increases drawdown. There's no right or wrong with drawdown control. It's down to you, how you want to do your drawdown control. Somebody messaged me on YouTube today, actually, and asked, they just got the Position Trader EA, I think it was. What's the best drawdown? They just watched the Bootcamp as well, which is great. Somebody's actually watched the Bootcamp, then bought the EA because they've watched the Bootcamp rather than buying the EA and going, what do I do with it? Why did you buy it? But it's a Bootcamp. What's the best setting for drawdown? Up to you. 4 candles. There we go again. So yeah, there is no right or wrong. It's whatever you're comfortable with. At the moment, because this market is very erratic and very tightly contracted, when we get moves a la this, they can be explosive because we've had very contracted ADRs. So I want to be out fast. But if you get out slower, obviously your drawdown is going to be higher. Someone say 4 candles. Yeah, I did. That's the difference between RSI 10 and RSI 14. 4 candles. Four candles. There you go. When did you enter NASDAQ today? Well, it's SIH, so it's the stock index hedge strategy. So I entered on the break of the open. So this is the stock index hedge EA. So this strategy looks at pre-market range width and opening range width and takes breaks of the open. So it's a momentum breakout strategy. So I took it on the momentum breakout short from the initial 5-minute opening range. If you had traded the pre-market range today, you would have been in on that candle way earlier than me, but that range was lower than 10% of the average daily range of the pair, so it's a bit too contracted, which means you've got more probability of a whipsaw taking you into a hedge position. That was the entry short. And I'm out now at yesterday's low. So you can see there's buyers coming in at yesterday's low. In fact, I'm just going to shut it at yesterday's low, I think. That's 500 bank there, 700 bank there, 250 hedge. Do the maths, it's a grand. Do. The S&P hedge target, oh, perfect, look at that. So downside target basically is that low. So this area here, it's not a very good level to be honest, but it's also just shy of ADR and a weekly high. So that is your 2-week high. So that's where we pushed up to 2 weeks ago. So there will be limit orders sitting at that high. We can see there's limit orders sitting at the high because they pushed down, the limit orders triggered and they bought it back up again. So they bought that breakout. They bought that breakout, sat around for a bit, pushed up, pulled back, pushed up, pulled back, bought the breakout. Yep, so the market is holding above last week's high. So if we push down into last week's high again, we would expect the buyers that broke out of last week's high to try and stay long. So that's where we should be able to get out of the short, if it can get there. But at the moment, we are buying yesterday's low. So target to the downside or leave where it is, which is a pretty good area. Upside target, it's not really a propulsion gap, but it is ADR. So upside target is basically ADR. So we either get an ADR hit to the downside or an ADR hit to the upside. If we do, then aggressive exit will kick in. If not, then it's just hedged. $250 loss. Is what it is. 4 candles. No O's. I can't remember the rest of the sketch. I can't remember what else there was. What else did they ask for in that sketch? I remember. Very funny. RSI 10 on H4, entries on H4 or still on M15. So the entries would still be on whatever, M15, M5. It's not the entry criteria, the entry time frame is not as important as the condition. The condition is stupidly stretched. Whether you get in on a 5-minute entry or a 15-minute entry, plugs. I can't remember it. Doesn't really matter whether you get in on a reversal alert entry or whether you get in on a moving average cross. Doesn't really matter. Rubber plugs. I'm not going down that route. Yeah, it doesn't really matter. It's the condition that's important, isn't it? You want to get in when the sellers are on side. So you either need to wait for a market reversal alert or a retest of the reversal alert, or you want to wait for a cross below a moving average, open above, close below, showing strength. So we're just looking for a strength move, basically, after the push, aren't we? Or as the bulls down here, that one, that's also an extension. Not below 80, but that's a 70. You're waiting, just buyers. So you either pick a 5-minute time frame or a 15. The 15 is going to enter later, but more confirmation. The 5 is going to enter quicker, get you a better price if you're right. You don't know if you're right. So it doesn't matter which one you get in on. But I would get in on 15 or 5 rather than hourly. Because the difference between the 4-hour and the hourly time frame is only 4 candles. The difference between the 15-minute and the 4-hour is 4 candles times 4, which gives you 16 candles. It's going to be a running joke, that, isn't it? Plugs, rubber plugs, bath plug, sink plug. No, 9-amp plug. The 2 Ronnies, they're brilliant. Anyway, Right, Euro odd, biggest extension of the day, 150 ADR, pulling off nicely at the moment. So we've hit this accumulation. So basically, exhausted buyers who bought that breakout there, trying to add into it, but I suspect they will get run over at some point. Probably not today, probably tomorrow. Right, that's all I've got for you today. So nice, easy trades today on US indices. Wow, 5R, look at that. Straight down. So just about to get out of the S&P. I'm going to let it hit target. I want it to be as stretched as possible before I get out. So yeah, nice, easy breaks today. NASDAQ, clean break short. Dow, clean break long. Hedge on the FTSE, but doesn't matter. 2 out of 3. Makes money. So I'll be back tomorrow morning at 8 o'clock, well 7:45 tomorrow morning, and we will do a recap of the week, have a look at how everything has gone this week, trade the FTSE and the DAX at the open, and yeah, and just obviously see where everything is really. And obviously get ready for the news next week. So next week I will be here on Monday, but I'm off Tuesday, Wednesday, Thursday, Friday, and I'm off the following Monday and Tuesday and back on the Wednesday. So I've got a week off. I will put that all up on the website and post it out so everybody knows. But yeah, so week off. Finally. Don't take enough. The trouble with being a trader and being your own boss is you don't take holiday. Too easy to work all year round. If I didn't get nagged, I probably wouldn't. I don't get nagged. I like taking holidays. Wouldn't an hourly entry on the 2MA be similar to an M15 entry on a 9? Yeah, probably. Probably similar, yeah. Test it. It's very easy to test. You just set the EA up. And you basically set everything up. So set up a 9 EMA or SMA or whatever you want entry there. Stick it on the 15-minute and run the RSI settings, which are there. Just trying to find them. Set it to daily 2. Whatever, close, doesn't really matter. And obviously 80-20, no, we're doing the 4 hour, aren't we? Sorry. 4 hour, 80-20 on the 10 or the 14, whatever. You know how to do it. I don't. Test that and then run the same test on the hourly time frame using a 2 instead. And then compare the results. See what the drawdown's like, see what the entries are like. But you'll find you'll probably take a similar amount of trades. You'll probably take a similar amount of drawdown, and the profit should be virtually the same. But you won't find a lot of difference. Like I said, it's not about the entry. The entry is irrelevant. It's the condition. This is what we're trading. We're trading a big, strong market push. Which time frame you use to enter your trade is going to give you a different price. Whether it comes down or goes up, that's what we're interested in. If it comes down, it doesn't matter whether you got in the 515 or the hourly. There's a profit. If you got in on the 515 or the hourly, you might have an entry there, there, or there. And if it pushes up, that's better than that. But you don't know which ones are going to push up and down. So it doesn't matter, does it? This is the condition. The condition is the condition. So test it. It's only ever going to show you what's happened in the past, and it's only going to give you a rough idea of what would happen to drawdown or what has happened to drawdown. So it gives you an idea of how it affects your drawdown. Are you more comfortable 5, 15 or hourly entries? It's so personal. 4 candles. Now you remind me of the sketch where Del Boy falls through the lifted bar top. I know, that's always on YouTube. That's hilarious as well. God, they don't make them like that anymore, do they? God, I'm old. Right, I will be back tomorrow at 7:45. If you're there, brilliant. If not, I'll be back on Monday at 8 o'clock. If you can't make either of those, watch the replays. Other than that, I'll be back the next US session in about a week and a half. All right, so have a good day. Anything you need, let me know. I'll be in Telegram or Discord, and I will be checking those while I'm away, so I will be around. All right, have a good one, and hope it's profitable. See you next time.